Imagine a traveler setting foot in a vast kingdom without a map. They see mountains, rivers, forests, and deserts, but don't know which paths lead to treasures and which to traps. That's exactly how many beginners enter financial markets. They hear terms like stocks, forex, or crypto, but can't see how these pieces fit together. The financial world consists of five major asset classes. First, we have equities, which represent company ownership and are primarily driven by earnings and innovation. Next are bonds, which essentially represent lending relationships, where interest rates serve as the primary driver. Then there are currencies, which reflect national economic strength and are heavily influenced by central bank policies. We also have commodities, the raw materials and resources that are highly sensitive to supply-demand shocks. Finally, alternatives offer diversification options, each with unique risks and behaviors that differ from traditional markets. Many new traders tend to make two common mistakes. First, they typically only know one asset class. For example, only trading stocks but having little awareness of how bonds or commodities affect them. Second, they may chase hype without understanding fundamentals. Many rush into crypto or forex without sufficiently understanding how different asset classes behave and interact. Here's the big idea. Each asset class has its own rules, but together they form an interconnected financial ecosystem. When bond yields rise, stock prices often fall. When the US dollar strengthens, commodities usually weaken. When stock markets crash, safe haven assets like gold rise. Understanding these connections gives traders significant edge in anticipating market movements. Each asset class is driven by different fundamental factors. For equities, the key drivers are company earnings, innovation, and investor sentiment. When it comes to bonds, we need to watch interest rates, inflation expectations, and credit risk. Currencies are moved by central bank policies, trade flows, and economic data releases. Commodities respond to supply-demand balance, geopolitical events, and even weather patterns. As for alternative assets, while each has its own unique drivers, they typically provide valuable diversification from traditional markets. How to start building your knowledge framework. Begin by writing down the 5 asset classes and listing 1 to 2 examples for each that you're familiar with. Then pick the most familiar class, like stocks, and read one article about how another class, like bonds, impacts it. Finally, start observing correlations. For example, when bond yields rise, stock prices often fall. Understanding asset classes is like understanding a financial ecosystem. Each has its own characteristics, rules, and market dynamics. The best traders aren't limited to one asset class. They understand how the whole system works together. In the next episode, we'll explore the 4 schools of trading and investing, the different philosophies that shape how traders approach the markets.